Welcome back. I am Pratap here. Today is 31st January 2024. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action course. And all the training videos are available at our NeoStock YouTube channel. There, go to the home page and scroll down to the playlist Supply Demand Zone Price Action Course. Click on this playlist and all the training videos are available in this playlist. Scroll down from the bottom, starting from lesson 1.1, 1.2, and then go up. You will be able to identify the most recent lesson here. Even the upcoming lessons also will be placed in this playlist. Please go through all these videos one by one in the order. And I'm also providing the link to this playlist in this YouTube video description. So go to this YouTube video description, click on the link, directly you will get into this page. I'm also providing the link to our Telegram channel in this YouTube video description. There also you will be able to find the links to all these video lessons. Also you will be able to find the links to the other analysis, daily analysis videos also. So please make use of this opportunity and strengthen your skills related to supply demand zone price action. Now let us get into our analysis discussion related to high liquidity zones. Even before that, look into Nifty. See the volatility in the market for the last few days. Market is going up, market is going down, again market is going up. If you look into the 75 minutes time frame, see here how prices went up. Prices were down and then again went up, again down. See, today also morning session market is down. After that, prices entered into the daily demand zone. Probably the pending orders or maybe the new orders again pushed the market up. And tomorrow is going to be the budget day. You can see a huge volatility in the market. Probably a lot of up and downs you might be seeing in tomorrow's market. So those who are not aware of the volatility concepts or volatility conditions, better to stay away from the market for tomorrow's trading point of view. And also it is going to be a very testing period for our high liquidity zones on tomorrow, especially on budget day. How our high liquidity zones is going to work, we need to test tomorrow. So that's why you should be very careful. But pre-budget sessions, that is today and yesterday, our high liquidity zones worked very well. Today even the high liquidity zone concepts worked pretty well, and whatever the concepts you learned from my earlier videos, all these concepts are executed on today. Probably almost all the concepts you learned, they are executed today. All the trades, nearly 4 trades are executed and 4 are successful trades. And all these 4 trades are based on 4 different concepts. The concepts related to rejection, the concepts related to entry buffer, the concepts related to a bull trap, and also the concepts related to aggressive trade. But this time the aggressive trade based on the pro gap. So all these points we are going to discuss in today's session. If anybody missed any of these topics earlier, probably today's session is going to be a very interesting session for you, and a lot of learning will be there from today's session. So this is also going to be a revision to all those concepts you learned earlier, in case if you learn all these concepts from my earlier discussions. Now let us get into the high liquidity zones generated yesterday. 6 high liquidity zones are generated from daily time frame and 75 minutes time frame. The first one is Tata Chemicals. This is a daily high liquidity zone. And today prices did not enter into the zone, but the point you have to observe, this daily high liquidity demand zone is having an entry buffer here, which is currently holding the prices. Even yesterday it reached, but today it pushed the price. But unfortunately today we did not get the entry in this entry buffer. Those who are not aware of the entry buffer concept, please go through the video. I explained in details about the entry buffer. I think that was about 1 hour video discussion, because now I cannot repeat the same again, because again it takes a lot of time. Instead, what you do, go to NeoStock home page. Here in that you will be scroll down, you will be able to find a playlist, terminology of NeoStock supply demand zone reports. So click on this playlist, terminology of NeoStock supply demand zone reports. And one of these lessons I explained about the entry buffer. Just to go through one of these, let me check quickly. You have one video on 20th October 2023, dynamic entry buffer. So please go through this video. So here I explained the entry buffer concept. This is almost 1 hour, more than 1 hour video. So it took entry buffer discussion itself took more than maybe 45 minutes or close to 1 hour. So that's why I'm not repeating this discussion, because whatever I explained, everything is available in this video. And in this stock, we didn't get the entry buffer entry, but some other stock we got the entry today based on this concept that we will see. But anyway, Tata Chemicals, we did not get an entry today. And the next one is DRREDDY. Yesterday we got a very good profit, even today also. Even though the zone is, the daily zone is violated, daily high liquidity supply zone is violated, before the violation, it gave a very good profit, and then after that, it went up. But the analysis part is very, very important. If you would not have fine-tuned properly the zone, you would have missed the entry. That's why experience is very important. Fine-tuning the zone is very, very important. It is a skill you all should develop. Just like that, you learn the zone confluence and you fine-tune. Just like that, that is not good enough. How accurately we need to fine-tune. That's kind of skill you need to develop. That is what I'm going to explain for this particular DRREDDY. Already yesterday we got an entry here. See here in this candle, this is the daily candle. We got the entry. Where we got the entry? In the 5 minutes zone. But I deleted that 5 minute zone. Why I deleted, I will explain. Again, I will draw and I will explain. Because we already got the entry. But what is that observation you have to make? See the rejection. It is very clear in the daily zone itself. If you get into the 15 minutes or 5 minutes, you may see even more rejection, bigger rejection. But anyway, daily itself, clearly visible the rejection. The moment prices went there, see how it pushed down. This itself a good indication. There is a strong order flow. See here, earlier also, there is a rejection. Because there is a rejection, we planned a trade. Just above this rejection, there is a zone, 5 minute zone. There we planned the trade, and yesterday the trade is executed. And you see the rejection, yesterday's rejection. Just above this rejection, you plan a trade. Probably that will again give you good profit. Why you have to plan like this? Because there is a huge order flow is there in this area. So one best technique to identify the order flow is based on the rejections. But you should be very careful. when you are using the concept rejections. When we have to use rejections, when you should not use rejections, you should clearly understand. The prices went more deep inside the zone, close to the distal line of the zone. And from there, if the rejection came, next time avoid the trade in that zone. That way you have to plan. Anyway, this example is going to be a very good learning for you, for all of you. Even if you are an experienced person, still it is going to be a good learning for us. So let me show you. So as per our technique, what we do from daily, we go to 75. We already fine-tuned 75-minute zone is there inside. So inside that 75 minutes area, you have to go to 15 minutes area. See, this is the 15 minutes area. This is the zone 15. You can extend up to here. Why you have to extend? To plan the 5 minutes area. So that's why I go to the 5 minutes. In the 5 minutes, at this proximal line, we identified a 5-minute zone. This is the one, 5-minute zone. This is what we planned yesterday. Yesterday's trade is from this zone. Earlier, there is a rejection here just before entering into 5 minutes. There is a rejection earlier. See how prices went? That itself indicates there is a huge order flow. That's why what happened? In recent trade, that is yesterday's trade, see prices entered into this area. And see the rejection from here. And then how the prices went down. That means there is a heavy order flow. If that is the case, can we plan a trade? Yes, you can plan a trade, but above this rejection, probably you can plan a trade. So how to plan the trade? What should be my stop loss? Because when you go more deep, there are higher chances your stop loss will hit. And moreover, it is already a tested zone. So that is the reason why you should look for order flow a little above that. Is there any order flow? You have to confirm. So for that, what I did, I looked for, are there any zone, 5-minute zone above this? Maybe this zone, whatever you have drawn yesterday, probably you can find you like this. But this is not a leg out candle. This is a base candle. So probably there is. But yesterday, prices went very close to this. Let me show you now. After, even if we draw after this, is there any rejection is available yesterday based on that? See? Yesterday, they went almost close to this. So that means probably there should be a strong order flow in this area. There should be very strong order flow. But the problem is risk is minimized. If the demand is very strong, there are higher chances that this distal line will be violated. So you can't plan a very teeny risky related zone. See, this is a high liquidity zone. This 5 minute, if this is a 5 minutes high liquidity zone, you can plan multiple tests. But this is not a high liquidity zone. This is a normal zone, but inside the daily high liquidity zone. So that's why it is not very safe. That's why what you have to do, for your support point of view, look for one more zone a little above. If this entire supply, pending orders in the supply is violated, the one above will be protecting you. But above there is no 5-minute zone, no clear. See, here we have a ERC candle is there. Whenever there is a ERC candle, one time frame below, probably you will find a good order flow will be there. Because this is a 5 minutes ERC candle, so what I did, I went one time frame below. That is 1 minute time frame. And the real order flow you have seen in the 1 minute time frame here. See here. We have a leg-in candle. Why leg-in candle? Because there is a gap at the hidden body. Now this entire candle is going to be a ERC candle. That is leg-in. Then you have a base candle, and then you have a drop candle. So you have a 1 minute order flow is there just above this 5 minutes, the remaining 5 minutes. See, this entire thing is 5 minutes area. But this 5 minutes, within this 5 minutes area, you see the 1 minute order flow again you are seeing. This is again a 1 minute order flow. You have a rally candle, 1, 2, 3 base candles and a drop candle. See here. This is a 1 minute order flow inside the 5 minutes area. You may ask a question, but yesterday why prices did not enter into this area? The reason is there is one more order flow here within the 5 minutes. That means within the 5 minutes, 2 1 minute order flows are there. See, most of the time the real order starts from 1 minute. That is what there. Yesterday prices went into this. There is one more even 1 minute. See here, drop, base, drop. This is LOTL within LOTL scenario within 1 minute. So you combine both the zones. See, yesterday prices went into this zone. You just cross check. Go to the yesterday's trade and check here. Yesterday it went up to this area. The first 1 minute, the LOTL, the first one. See here a thin gap, a line here. This is the first 1 minute. This is the second 1 minute, LOTL. The first 1 minute supply zone, yesterday we got the order. And today what will happen? Prices will enter into the second 1 minute area. Either from there it will come down. That is one possibility. Let me delete the 1 minute that is executed yesterday inside 5 minutes. Let me delete this. So this is the one. This is the one not yet executed, this 1 minute area. Within the 5 minutes. And this one is just above the 5 minutes, the order flow. So today, most probably, the prices should enter into this area and it will push the down. Due to any reason, if this zone is not able to hold, then immediately the next one more 1 minute is there. That also will further support in consuming the remaining demand in the market, and it will push the prices down. Then how you have to plan? You have to plan your trade in such a way, this is going to be your entry and this is going to be your stop loss. And that clarity you get if you go to 15 minutes time frame. See here, you have a order flow like this. You have a rally, base, drop. Now plan your 15 minutes with the type 2 proximal entry. See, now this is exactly, there is a 1 minute time frame and the next 1 minute time frame, everything fit inside the 15 minutes zone. We have the order flows are there, real order flows. That's why there were a lot of rejections earlier. What we did, we fine-tuned in such a way. The real order flows we identified, which are actually pushing the prices down in Dr. Reddy lab. So we have a rally, we have a base and a drop. This is 5 minutes point of view. Inside we have, this is the 1 minute order flow, this is another 1 minute order flow. This 1 minute order flow is there inside the 5 minutes order flow. Below that there is one more 1 minute inside the 5 minutes. From there we got the entry yesterday. And today probably our entry is from here. Due to any reason, if this is violated, there you get one more. But you cannot take entry on the 1 minute. You have to take the entry in 5 minutes or 15 minutes area. The reason is 1 minute order flows, we never know how strong they are going to be. So that's why when you have multiple order flows, if one fails, the other one will support. If one fails, before it failed, it might have consumed the existing demand in the market. The demand might have been weakened by the time it enters into this area. But this fine-tuned area is within our risk limit. The risk reward should support. Then only you have to plan your trade. If the risk reward does not support, you should not plan. Okay, if it has to plan, so where is your reward? Your reward is here. Where is your risk? This is your risk. If you want to see what is the RR, go to short position. There you check. So this is your stop loss close to this. And this is your entry close to this. And this is your target. See, you have 5:5 reward for your risk. It is an amazing trade, 5:5. This is how you have to analyze the stocks when you are finding rejections. That's why rejections is a very powerful concept. Especially the rejections from high liquidity zones is the most powerful concept. See, all this analysis, if you observe clearly, it is based on the rejections. And then second technique, apart from that, fine-tuning the zone in identifying the real order flow. That's why this analysis part is a very, very important. This is an advanced level analysis. And this kind of skill everybody should build to get good profits. So we got 5:5, RR we got. And see what happened today. Let me go to 5 minutes or even 1 minute to bring better clarity. See today what happened. Prices went. And the demand is very strong today because the created institutions created a new demand zone. This is the new 15 minutes demand zone they created. See the demand. And when this demand is weakened, once it entered, because here the first 1 minute consumed all the orders, and by the time the prices went into the second 1 minute, what happened? The pending orders in the second 1 minute area inside the 15 minutes area consumed the entire demand, then started pushing the prices down. Probably institutions might have tried to further push, still the 1 minute area is holding, and finally the entire demand is consumed. And after that, see how fast the prices came down. Nearly how minutes prices were moving around here? 1, 2, 3, 4, 5, 6 minutes. The prices are within the zone area. So within 5 minutes area, continuously you got short opportunities. If you would have missed in the first candle, this is a 919 candle, 920, 921, 922, we didn't get an entry. But again, 923 and 924. One of these candles, you would have got an entry. And after that, see how it pushed from 924 and finally reached the target at 930 candle. Your entire trade is finished in just 15 minutes. This is 919, say 920. This is 930. Within 11 minutes, 10 plus 1, 11 minutes, the trade is finished. You know how much profit Dr. Reddy has given? It has given 12,250 rupees. Yesterday also it has given 12,500 profit. Today 12,250 rupees profit it gave, which is 9% return on the investment, ROI, as per one future slot. But one point you have to observe. The trade is not like yesterday. Yesterday you see what happened? This is the area. Prices went, the rejection started, sharply prices went down. This is the area, the 1 minute area, inside 5 minutes. The 1 minute area inside 1 minute. The one we deleted. From here prices came down very sharply. But today that is not the case. Today there was some struggle here. Why there was some struggle? Demand is very strong. And the demand consumed a lot of pending order flow in this area. Which area? The supply zone area. And moreover, prices went deep inside within this 15 minutes area. So that is the reason why we can conclude the majority of the order flow in the supply zone is consumed. Definitely next time the prices will be breaking this zone. And above this zone there is no 15 minutes or 5 minutes area. Probably the entire supply zone also will be violated easily. See, that is what happened next time. And prices, how easily, there is no resistance at all from these zones. These are all 1 minute candles. Maybe there was some struggle here for some time, just little above, some order flow might be there, but that is only temporary. And then finally prices, it went up, 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 up. Okay, what happened next? We don't bother about that. What we want, according to our analysis, we got a trade and the trade is successful, reached the 15 minutes target. But who did this magic? The 1 minute order, the real order flows, they did the magic. But we followed our approach. We didn't deviate the approach. Inside the daily we looked for 75. Inside the 75 we looked for 15 minutes. Inside the 15 we looked for 5 minutes. Further we fine-tuned at 1 minute level to find the real order flow. The reason why we looked at the 1 minute area is because there are a lot of rejections from this area. When there is a strong rejection, it is not a simple rejections, they are strong rejections. Because of the strong rejections, we went more deep up to 1 minute level area and we identified the real order flow and eliminated the tested 1 minutes. We deleted all the tested 1 minutes. And finally we kept only non-tested, that means fresh 1 minute zones, and we made sure they are all there in a proper way to manage our risk. That is very important. They all should support our risk management. If they does not support risk management, we don't go further. And we ensured everything is there inside the 15 minutes area, that too based on type 2 proximal 15 minutes area. Because of type 2 proximal, the risk is minimized within the control. And also we got the best reward until the target 15 minute zone. We got 1:5. We got 1:5.5 RR we got. That is an amazing. That's why we got an ROI 9% for DRREDDY, which is 12,250 rupees profit. Almost close to the same what we got yesterday. So this is about DRREDDY, and we were able to achieve this kind of thing based on the concept rejections and fine-tuning up to 1 minute area. Apart from that, clean observations about the price action. See, always those who observe price actions in a perfect way, they are always going to be a successful traders. This is what you have to understand from this analysis part of DRREDDY. It's a very good example for you, for the learning point of view. Now let us move on to the next stock, ABFRL. This is a 75 minutes demand zone. We did not get the entry into the zone. The reason is, see the order flow from here. It is holding. That means there is an entry buffer for this 75 minutes area. So go to the 75 minutes, from 75 minutes go to the 15 minutes. Let me change it to 15 minutes. See here, you are able to see a zone here, 15 minute zone. If you want to further fine tune, go to 5 minutes, you will get even better clarity. So this is the 5 minute zone within the 15 minutes area. Now you draw the zone here. And fine tune. You may ask a question, why we didn't take a trade today? Reason is, this is the first time prices entered into this zone. After first time, if prices are moved up, then only we can confirm it is a entry buffer. That is what I explained in the entry buffer video. At least one test has to be done to confirm it is an entry buffer. Entry buffer, generally what it does, it plays, the institutions plays order flow before high liquidity zone. Most of the time that entry buffer order flow will hold the prices. See, ultimately these entry buffers will be future, it will be turned as high liquidity zones, lower time frame high liquidity, like 5 minutes high liquidity zone or 15 minutes high liquidity zone. And once that is broken, then prices will enter into our actual high liquidity zone, and wherever we fine tuned, probably there we take the trades. But before that, until it is violated, the entry buffer mostly supports multiple trades. Maybe 2 or 3 trades we will get. The first one we already confirmed. But here I made one small mistake in my analysis part. I just realized that mistake. Otherwise, we would have taken another entry here today itself. My mistake is when you draw week to week, already it gave a test. Already it gave a test, the entry buffer. See the push from here. Probably it could be a clue. Based on this, probably if you predict this is the entry buffer, because yesterday prices it holded. This is the yesterday's price. And this candle is today, 9:15 candle today. Today prices entered into this area. It got the entry. But yesterday prices are closed inside this. Probably that is one negative point. Closing price always because it is closed, maybe it's because prices reached during last hour of the trading session. That could be another reason. But whatever it is, this is the first clue to confirm it is a entry buffer. Because I directly fine-tuned to type 2 proximal, just ignored this during my analysis part. But what we can do next time, again, when prices are entering, we can plan a trade here by doing proper risk management. In case if the entry buffer is violated, then immediately you can plan the trade in the next. The reason is, by the time prices reaches here, the pending orders in the entry buffer area would have been consumed the supply, and probably when prices reaches to your actual fine-tuned demand zone, you will be having higher success rate. All these points we discussed during entry buffer area. Anyway, this is the missed trade due to a small mistake in the analysis. Otherwise, we would have identified, because this is going to be the first test. This is the second test. Yesterday and today together going to be a second test. So I'm leaving this. Next one is Bajaj Finance. Bajaj Finance is a 75 minutes zone. Oh, is it 75? We have a drop 1, 2, 3, 4, 5, 6 base candles and a rally candle. This is a 75 minutes demand zone. So already fine-tuned this. Identified to 15 minutes area. Inside the 15, again 5 minutes areas. We fine-tuned already. But prices did not enter into this zone. What is the reason? The reason is we identified an entry buffer here. The 55 minutes level, let me show you. Which is stopping the prices to reach up to this demand zone. So we have a leg-in candle rally, 2 base candles and a rally candle. Or if you want to consider not as a medium size or small size candles, you will be having a rally 1, 2, 3, 4, 5 base candles. Even that way also the zone remains same, no changes. So in this zone, already this is tested once and pushed the prices up. Let me show you the tested area. See here. See the rejection, the entry buffer, how strong earlier. And again prices entered today in this candle. So we got the entry and then again pushed the price up to the 15 minutes target area. Let me show you the 15 minutes target. We have a drop, 2 base candles and a drop. So this is purely based on the entry buffer. So this is the way BAJFINANCE has given a profit 10,687 rupees, which is 7% return on the investment as per one future slot. So 7% ROI we got. So it's a good profit, 10,687. So another profitable stock. And next one is Hindustan Unilever. In Hindustan Unilever, this is also a 75 minutes demand zone. Let me show you the 75 minutes demand zone. So this is the one. We have a rally candle, 1, 2, 3, 4 base candles and a rally candle with a pro gap. And this we fine tune to 15 minutes. But 15 minutes there is a problem. The structure is not at all good. There are higher chances of this zone will be violated because 15 minute structure is not good. That's true. That happens in most of the scenarios. That's why what we do, if the 15 minute structure is not good, we don't even bother about fine tuning the 5 minutes area because we know that this zone will be violated. But there is one special scenario. That special scenario maybe you miss if you don't look inside the 5 minutes area. If you are taking a decision purely based on the 15 minutes, anyway the structure is not at all good, and if you ignore the stock, sometimes some special scenario you will miss. That is what happened today. What is that special scenario? Aggressive trades. That is what I explained. How to trade aggressive. What is aggressive trade? Bypassing the 15 minutes and directly get into 5 minutes area. So from 75 minutes, we have to go to 15 minutes. Inside 15 minutes, you have to go to 5 minutes. That is the normal trades. What is aggressive trade? From 75 minutes, you directly get into 5 minutes by bypassing the 15 minutes. Why you bypass? Because sometimes you may see such kind of structures and you don't find a proper zone, but there is a real zone will be there in 5 minutes area. But how do we know that is a real zone? Can we take those kind of trades? Yes, we can take those kind of trades, but that is going to be an aggressive trade. That is what I explained earlier. But aggressive trades should always be supported by price action clues. If price action clues are not supported, you should not go for the aggressive trades. Clearly explained. You can also find aggressive trade videos in this NeoStock terminology. So go to NeoStock terminology. There you search again. Earlier we searched entry buffer, similar way. Aggressive. So we have one stock is there, 1 out of 1. See here, 7th November 2023, aggressive setup, I explained. NeoStock terminology is very important because a lot of advanced strategies, advanced concepts I explained and I put them in this section. Because in the training program to get into all these topics, it takes a lot of time. So that's why for those people who are already having some knowledge about demand and supply zone, to support them, I made these special videos. I didn't made specially, but during our analysis part, whenever such kind of situations arise at the time, those videos, I put them in this playlist for our future reference point of view. And I gave some detailed explanation in these videos, so that this explanation will be helpful in the future. That is what, if you are a new person or recently joined members, you didn't go through these videos, it is going to be helpful to you. See today what happened, we got all kinds of trades happened today. Whatever we discussed earlier, all these videos, everything happened today. So that's why it is a good revision for all the people who learned all these concepts. And all those who did not learn, probably you will be learning now by going through these videos. So what is aggressive trade? Already we discussed. We just bypass and 15 minutes and go to, because 15 minutes we didn't have clarity. So what I'm doing, directly going to 5 minutes. So without 15 minutes, going directly 5 minutes is a dangerous situation. But the dangerous situation, if you want to convert to an aggressive trade. Aggressive means quite higher risky trade. That is what the meaning. It is quite higher risky. So aggressively we are going and taking trade. So when you want to take, price action close should be supported. If they are supported, the higher success rate will be there. If they are not supported, most probably easily this zone will be violated. What are the price action close? Mostly we will be looking for. One is either a pro gap. Second one is, and the most important thing is, rejections earlier. Probably prices went close to this zone and then rejected. Prices didn't enter. So that indicates there is a lot of order flow is there, strong order flow. So next time again prices enter into this zone, you give importance to this zone even though it is not there in the 15 minutes, and you can take a trade. What is the second option? Pro gap. Pro gap is always a strong, indicates a strong order flow is there. Most of the time what happens, prices enter into the pro gap and go up. Next time again after that the prices enter into this zone, you can take the trade. And if the prices are consumed all the orders in the pro gap area in the first instance, see in this example that is what happened. In this pro gap area, first time consumed all the pro gap area pending orders and just reached, by the time it reaches into this zone, mostly existing supply will be consumed completely. Because existing supply is completely consumed, what happened? The moment it reaches into the demand zone, see the push. Very strong push. And moreover, this 15 minutes, look into this 15 minutes target. The 15 minutes target is quite far away from here. From this zone, quite far away. Even then, it reached the 15 minutes target. Why? Because the pro gap area consumed all the pending areas. If at all any remaining orders, probably they would be executed here. But just before, few paisa before, I think 5 paisa before. Generally we place our orders a little above that. Just 5 paisa before, prices started moving up and finally reached the target in this candle, 1445. When we got the trade, at 10:15 candle we got the trade, and 14:45 candle it reached the target. And that way, Hindustan Unilever has given 10,815 rupees profit, which is 8.2% return on the investment as per one future slot. If you are using options, probably the calculations will be based on your options related concepts. So this is about Hindustan Unilever based on the concept aggressive trade with the help of pro-gap. If you want to go for an aggressive trade, mostly these two should support you. The price action close earlier, there should be rejections before the zone, or there should be pro-gaps. So anyway, go through this video, aggressive trade setup, that there probably I would have given more detailed explanation in that video. So we got the third successful trade. Next one is DRREDDY. This is also another concept. The concept you learned bull trap. See how well the bull trap worked today. This is also a 75 minutes zone, 75 minutes supply zone. Look here, we have a drop, base, drop. Just above that, identified the 5 minutes bull trap. If this zone is violated, there are higher chances this bull trap will be executed. The reason is this 15 minutes zone is actually, if there is a 15 minutes inside, this is the fine-tuned 5 minutes zone. This is the whatever currently the dark red color, that is 5 minutes inside the 15 minutes. This is the fine-tuned zone. And this is at the distal line of this 75 minutes high liquidity zone. Majority of the times, not always, but majority of the times, when you have a 15-minute zone at the distal line or the 5-minute zone at the distal line of this, the 5 minutes means fine-tuned 5 minutes. That means 5 minutes should be inside 15 minutes. If that zone is there at the distal line and there are some pending orders inside this zone, if those pending orders are consumed but still unable to hold the demand, so if it is violated, most probably the 5-minute zone or 15-minute zone above this high liquidity zone will act as a trap. Institutions, they design like that. They design. How this design perfectly worked, today's example is a classic example. Let me show you. Why I'm saying it is a classic, you will understand after the explanation. What is a bull trap that I already explained in the bull traps? Same bull trap video also again you can find in this video. Maybe I didn't give heading. I think the bull traps explained in some of the videos, maybe in the heading, in the title I would not have given. If you go to these video descriptions, probably you will identify. Or if you go through in our Telegram channel, the earlier links you will identify. Because there were multiple discussions about bull traps. See here, this is a 5-minute zone, fine-tuned inside 15 minutes. The 15 minutes is inside 75. So for me, for that what I do, first I will go to 15 minutes time frame. Let us see where our 15-minute zone is there. See here, we have a rally, base, drop. This is a 15-minute zone. Then you may ask a question, why I am saying this is 5 minutes? Because 5 minutes is also exactly the same. Both 5 minutes and 15 minutes, they occupied the same area. Let me go to 5 minutes area and look into this zone. See here, you have a ERC candle, base candles, 1, 2, 3 base candles and a drop candle. It also exactly occupied the same. And this zone is already tested once. See here, this zone, this 5 minutes zone is already tested zone. Because it is already tested zone, there are higher chances this zone will be violated. But the point you have to observe, this is a type 1 test. When you want to go for a deep entry, there is a chance that most of the time at deep also you get an entry most of the times, but we don't have guarantee. Because tested, there is no guarantee it works unless there is a strong rejections from this area, earlier test. But earlier when it is tested, are there any strong rejections? Compare this chart with Dr. Reddy Labs. This is the best example. Dr. Reddy Labs, yesterday when it is tested, see the rejection from this area. But that is not the case in this stock. A lot of time the stock was tested. That means here, consumed a lot of orders in this area. The only favorable condition is prices didn't go above this area. But within this area, let me draw another horizontal line where how much time it spent in that area, we will understand. Let me draw a horizontal line, one more here. This is the type 1 proximal. This is the maximum level it reached. But during that time, the rejection should be strong. In one shot, the prices should come down. But is that happened? That is what you have to observe. See here, this is the first 5 minutes candle. This is the second 5 minutes candle. This is the third 5 minutes candle. This is the fourth 5 minutes candle. If you look into 1 minute, you get better clarity how much time prices were there in this area. So this is what happened. This is the first, second, third, fourth, fifth, sixth. Moreover, one candle is there inside. 7th, 8th, 9th, 10th, 11th. 11 minutes it stayed inside that zone. Obviously, that matters to me. Why it matters to me? Because it consumed a lot of order flow here. And this is only the remaining order flow. This is the remaining order flow. In this order flow, how strong are the pending orders, we don't know. If they are very strong, probably again it will push. If it is not very strong, this will be violated. See today what happened? Prices came and they struggled. They were struggling. Slowly again, it is not pushing down because it is not having the power. Now again went deep, again further pushing down but not having power to reach the target. Again prices finally went very close to the distal line. It didn't violate. Again further came down at some extent. Again prices, this time you see it is violated. When this much struggle is there in this area, what does it indicate? Think, what does it indicate? This is what your experience now. Answer to my question. It indicates majority of the demand is consumed by these pending orders in this area. Majority of the demand is weakened, but just above that a trap is waiting. What for it is waiting? Because this zone is violated, And all the supply demand zone traders, what they do? They exit from their short orders. They might have taken a short trade here in this candle. They keep on waiting. But prices are not going down and they are struggling here. And they didn't go down, and finally it violated the zone. The moment it is violated, all these people will start exiting. What institutions are doing, whatever you exit, they are consuming all your orders, your stop loss orders. The moment you want to exit, which order you will place? Long order you will place. That means you are a bull. What institutions are doing? They are capturing all your bull orders. That means long orders. That means bulls are trapped. So that's why this 5-minute zone is acting as a trap. See, the moment the prices entered, because very strong institutional orders are there, it pushed. See the rejection. This itself is an indication. Strong rejection. After that, maybe some other institutions try to push. It's not possible. And then finally came down, and finally reached the target, the 15 minutes target. But why we didn't plan the trade? The reason is, last time when prices are tested, during this test there is no strong rejection. Prices were struggled here. That itself is indication that a lot of orders might have been consumed here. Next time again prices enter into this zone a little above, a deep inside the zone. See, this is at the proximal line, this is a deep inside the zone. If you want to go for a deep inside, that means second trade in this zone, the first trade should be give a strong rejection. Remember, always it's a very important technique. If you want to plan, the first trade is at the proximal 1. The second trade is at proximal 2. That way you want to plan 2 trades in the same zone. The only option you have to do, there should be a strong rejection from that zone. Then you can plan the second trade. But still, there are times that also will fail. There are times. But there are times some success also will be there. Both options are there. In case if you want to take a risk, because the risk is very minimal, even if you lose, very marginal amount you will lose, but you want to take a chance, at the time you can go for second trade. When there is a strong rejection during our first trade. But during our first trade, there is no strong rejection. Prices were stayed there a lot of time, nearly 10 minutes or 11 minutes in the 1 minute candle we have seen. Consumed a lot of orders there. So second time means today. See, today when prices entered into this is yesterday. This is today. Today when prices entered into this area, what happened? They didn't have enough power to push the prices down. Why they didn't have enough power? Because institutions, they play like that. Because they set a trap. When they set up a trap, they want to capture all our order flow. Our means we are the retail traders. All the retail traders who have taken trade in this zone, but their stop loss will hit, everything consumed, and then pushed the prices. That means institutions trapped us. Hope you got the clarity about this concept, those who haven't learned earlier. And that way, bull trap trade is executed today. And I know that this trap works pretty well after seeing all these candles, rejections. Small rejections only, not able to push down, but still I know that these pending orders are consuming the demand. By the time prices reach to the trap area, definitely the demand will become weakened and the pending orders in the trap area will push the prices. That is the reason why institutions put this trap. Kept this trap. Okay, Dalmia Bharat has given a profit 7,625 rupees, which is a 6.8% return on the investment as per one future slot. See what happened today. 4 different types of trades happened today. Dr. Reddy Labs trade is based on the rejections. The 15 minutes entry we took, deep entry inside the 15 minutes. Based on the strong rejections, I should say, based on the strong rejections. And BAJFINANCE concept is based on the entry buffer. And HINDUNILVR concept is based on aggressive trade with the help of pro gap. And the Dalmia Bharat is based on the bull trap. See, whatever the concepts, majority of the concepts, advanced concepts, these are all advanced strategies. The majority of the advanced strategies we discussed earlier, they are all executed in one day itself, in one trading day, for different stocks. So that's why this video is a very important video. So many concepts we have seen in one video itself. That means in one day itself. So that way 4 high liquidity zones are executed today. Even yesterday also 4 high liquidity zones, all are successful. That means pre-budget day, whatever our high liquidity concepts successfully hold it. That means our high liquidity didn't fail. But tomorrow is the actual budget area. So how our high liquidity is going to work, or is it going to fail, we have to test tomorrow. So better, I don't know if you are, unless you are highly experienced, otherwise stay away from the trades tomorrow. Generally, demand and supply zone traders, they always say, avoid important events. Avoid trading on important events. Budget is one such kind of event. Another one is Fed reserves, and another one is your results day, the stock you cannot trade. Like that, some rules are there for demand and supply zone traders. So this is a budget area, but how our high liquidity zones work, we have to test, because we should not compromise. If it worked pretty well, pre-budget also you have to avoid the trades, but our high liquidity zones worked. They gave even much better returns. But how it is going to work tomorrow, we have to see. First of all, how many zones are generated today? But we will see after the zone generation. Now let us get into the generation of demand and supply zones near all demand and supply zones for all the time frames. So let's start with yearly time frame. So yearly time frame, let us find the stocks near demand zones, if any. No stocks are there. For yearly time frame, let us find if there are any supply zones. No zones are there. That means there is prices haven't reached near the zones, maybe somewhere in the middle for all the stocks. And now let us change the time frame to half yearly. Let us find the stocks near half yearly demand zone. One stock is there near to half yearly demand zone. So let's go back. For half yearly time frame, let us find the stocks near half yearly supply zone. No stocks are there. Next, let us change the time frame to quarterly and find the stocks near quarterly demand zone. One stock is filtered. Let me go back. Quarterly time frame. Let us find the stocks near quarterly supply zone. So one stock is filtered. Let me go back and change the time frame to monthly, and let us find the stocks near monthly demand zone. So 5 stocks are near monthly demand zone. So let's go back. For monthly time frame, let us find the stocks near monthly supply zone. So 2 stocks are filtered. So let's go back. Let me change the time frame to weekly, and let us find the stocks near weekly demand zone. One stock is filtered, which is near weekly demand zone. Now weekly time frame, let us find the stocks near weekly supply zone. So 8 stocks are filtered near to the weekly supply zone. Let me go back. Let me change the time frame to daily. Entry time frame is daily. Let us find the stocks near daily demand zone. 5 stocks are filtered. Any high liquidity zones? This is POST. So we don't have any high liquidity daily demand zones from today's list. So let me go back for daily time frame. Let us find the stocks near daily supply zone. 5 stocks are filtered. We have to look for high liquidity supply zones. First one is the indices, 50 consumer durables, but we look for stocks. Bata India is there, high liquidity zone, but this is a fresh zone. Because it is a fresh zone, you should be careful. You should properly fine tune the zone and check the quality of the zone. If the quality is not good, the zone will be violated. Also remember, this is low on the curve. Anyway, we don't really care about the location, trend, price direction for high liquidity zones. And next one is burger paint. This is high on the curve and this is a fresh zone. Burger paint is also a fresh, high liquidity, daily high liquidity supply zone. This is the second stock. So we have identified only 2 high liquidity zones, Bata India and burger paint. So let's go back. Let us change the time frame to 125 minutes and let us find the stocks near 125 minutes demand zone. So 8 stocks are filtered. So let me go back. For 125 minutes time frame, let us find the stocks near 125 minutes supply zone. 6 stocks are filtered. So let me go back. Let me change the time frame to 75 minutes. Entry time frame is 75 minutes. Let us find the stocks which are near to 75 minutes demand zone. 4 stocks are filtered. Let us check the high liquidity zones. We have DRREDDY, only one high liquidity zone we identified from this list. And it is tested once and 2 rejections. Okay, let's go back. For entry time frame 75 minutes, let us find the stocks near to 75 minutes supply zone. So this is the filtered list. Let us look for high liquidity supply zones. GNFC one stock is there. Already tested once and 2 rejections are there. That's it, only one stock. So total 4 high liquidity zones we identified today. One is a high liquidity demand zone, daily demand zone, and 2 stocks are high liquidity. Sorry. Okay, anyway, I lost the track. Total 4 high liquidity zones we identified from a daily time frame and 75 minutes time frame. Now let's go back. Let us change the time frame to 25 minutes. Let us find the stocks near 25 minutes demand zone. So total 11 stocks are filtered near to the 25 minutes demand zone. Let me go back. For 25 minutes time frame, let us find the stocks near 25 minutes supply zone. So 3 stocks are filtered near to the 25 minutes supply zone. Let me go back. Let me change the time frame to 15 minutes. Let us find the stocks near 15 minutes demand zone. So 8 stocks are filtered, which is near to the 15 minutes demand zone. So let me go back. For 15 minutes time frame, let us find the stocks near 15 minutes supply zone. So 4 stocks are filtered. So let me go back. Let me change the time frame to 5 minutes and let us find the stocks near 5 minutes demand zone. So 3 stocks are filtered. So let me go back for 5 minutes time frame. Let me find the stocks near 5 minutes supply zone. So these 8 stocks are near 5 minutes supply zone. So this is about the filtered list for all the stocks near demand zones and supply zones for all the time frames starting from yearly until 5 minutes. Hope this information is useful to you. Let us all meet again in our next video. Thank you.